You got your second deal within 4 months of your first deal. I tell folks all the time, like the first deal is always the hardest. And you've got to get in the game. Like you got in the game, start out making offers, analyzing deals at nauseum. And you do that for 6 months. Eventually, you're going to spot a good deal.
Mm-hmm.
But then it comes down to you actually have to play the game. You got to buy
Mm-hmm.
something. Do you think that because it took you 18 months to get that first deal, but 4 months to get the second, do you think that's because of that extra field time that you had, game time that you had closing on that first deal? Is that probably what allowed you to now escalate the time and close that other one in 4 months?
There's a couple of thoughts come to mind. Mark Twain's quote, "It ain't what you don't know that will get you in trouble. It's what you know for sure that just ain't so." And what do I mean by that? Everyone listening to this is like, multifamily is a pie in the sky. I could never own an apartment complex. Well, you can become a limited partner for as little as $50,000 in a deal, and you own multifamily. So right there off the bat, crush that limiting belief. Or you could learn how to creatively finance a deal. Our first deal was seller finance. We needed $80,000 total closing costs on a $600,000 asset to get a 25-unit property. I'm sure a lot of the listeners out there know and can get $80,000. And if it's not their money, they'll go out and borrow it from somebody else as well. So the idea was, we didn't know what we were doing. We didn't know the multiple ways to get into multifamily. We didn't know how to speak to brokers. We didn't know how to analyze deals properly. We didn't know how to do property tours. We didn't know how to put offers in. And that's why I created Jake and Gino. I'm like, there's got to be a better way. And you said something that really stood out to me. Analyze deals and find deals. Most investors out there don't even know what a deal is, or don't even know how to analyze a deal. Or more importantly, how many of you out there have actually created a criteria for buy rate for yourself? What kind of deals are you looking for? Are you looking for newer assets, older assets? How many units? How much capital do you have? What is your net worth? Do you have investors out there? How long are you going to hold the asset for? What is your exit strategy? All of these questions play into the type of deal you're looking at. So if you're coming to me, I'm looking for deal flow. Well, what type of deal are you looking for? Anything that makes money, cash flow. Let's get a little more granular than that. If you don't know that, it's going to take you 6 years to find a deal. You need to know what works for you, because a deal that works for Gino and one that works for Chris may not work for John or for Mary. Get granular on what you're trying to do. Some markets, you're going to really crush it with capital appreciation in the future, but they may not cash flow for the first 18 months or 24 months. If you're a person who's older and needs some retirement income, you may have to invest in a market that is going to provide a little more cash flow, but a little less capital appreciation. So figure out what you're trying to do. And ultimately, imagine a conveyor belt. We talk about the conveyor belt theory at Jake and Gino. What your goal is to get a deal on that conveyor belt. It's comprised of cash flow and capital appreciation. As you get more assets stacked on the conveyor belt, you're creating a multifamily business so you can replicate this. Those deals start to matriculate. All of a sudden, that equity comes into play 2 or 3 years down the road, and you either sell the asset, you refinance the asset, or you continue to hold it, and that cash flow continues to snowball. That's what I think a lot of a lot of investors don't understand. That's the biggest mistake I think that I made initially on, is I didn't look at every deal as what my exit strategy was going to be. I thought I'm going to buy and hold forever. Well, you know what? You're buying and holding forever. Some of these assets become functionally obsolescent. When you're at a high of the market right now, maybe it's time to take some of that equity off and repurpose it from the conveyor belt and put it into a different asset, maybe a newer property right now. So have that exit strategy cleared out. Know what your buy right criteria is. Real quick, ours, we want assets 80s and newer, hopefully brick. We love 100 units plus, but we're looking for any deal size, because that's what the smaller deals in this market right now are really crushing it. We're looking for median incomes for at least $50,000 for median income around the property. We love two beds, 1.5 baths, townhomes preferably. We like washer dryer hookups in these units, because that's a really big amenity. Mm-hmm. What else are we looking for? I mean, as far as cap rates, you have to go with what the ingoing cap rate is of a market. So in Knoxville, they're 4 to 5 caps. That's what you're looking for in these types of properties. Get granular on what kind of cash on cash returns and debt coverage ratios you need to have. And the reason why I say this is it's all about focus, and pick a market and learn the market. When you're focused on that asset, I send that deal criteria, or I speak to a broker. That broker knows what I'm looking for. He's not going to send me a deal in a D area. He's not going to send me a brand new build. He's not going to waste my time. He's going to send me what I'm looking for. And I am going to look professional. They're not going to ask me for my proof of funds because they know I'm a player, and it's all about focus. So when that deal comes, all of a sudden you just know it. We're just signing on a deal today. 40 units, 2 beds, '05 build, amazing price, mom and pop. It's just checks every box that we're looking for. And when that popped up, my partner got in the car, drove out there, knew what he was looking for. Didn't even have to underwrite the deal. We know exactly what the numbers are. Once you get really comfortable, you know that the numbers make absolute sense. So you don't have to waste time doing it. So focus on it, but learn that buy right criteria and start creating one specifically for yourself.